So VeloTrade created an online marketplace that allows corporates to discount the trade receivable, therefore obtaining financing against the selling of this receivable to professional investors. So VeloTrade takes care of the origination, verification and settlement of these transactions. So there are different clients that we target. So there are clients that are the underserved, which are the ones that cannot obtain line of credit from banks for various reasons. Some because have been in business for less than 3 years, which is the minimum threshold for banks to accept these SMEs as a client. Some have got limited banking facilities, but due to seasonal adjustments they will need to obtain more financing, but banks most of the times do not concede this extra financing. And the third and largest group of clients is the clients that already have plenty of banking facilities. They bank with different banks. However, they understand that they need to diversify away from the banking sector, because if something were to happen to the banking sector as a whole, then they would have an issue obtaining financing. So with VeloTrade, the attractiveness of our business model is that corporates face VeloTrade as a single entity, but VeloTrade on the back has got a number of different investors, ranging from asset managers, hedge funds, investment funds and family offices. So we could cater to many different market conditions, allowing the corporates to obtain financing. So the opportunities, we find that there are traditional players in this trade finance space that are incapable or unwilling to carry out certain transactions. So VeloTrade would like to, or is already partnering with some of them, to provide an offering so that, for example, banks or other financial institutions, they could still retain the relationship with their clients, but they would sell down the risk to VeloTrade, because we are capable of selling this to our investors. So it's a win-win situation for everybody. The corporates, the client of the bank can still obtain financing, the bank preserves the relationship with the clients, and we are buying these receivables off the bank balance sheet, and we are selling to our investors that are happy to purchase this receivable to gain extra yield on this new and very attractive asset class. The concept is that they would like to get into this, but they find it very difficult because the legacy software does not allow them to do this. With VeloTrade, we are capable of having our own platform sitting on the side of the legacy software, so without impacting their operational activity, without taking so many months to integrate, but yet allowing the banks or financial institutions to operate in a new digital ecosystem. And the simple answer is because if you want to create a marketplace, if you want to be seen as a reference point in the market, then you need to embrace regulation. Because when you are looking at attracting money from big financial institutions, you need to be able to speak the same language. And regulation is something very important, obviously, for these financial institutions. So by trading a receivable per se, you don't need to be regulated. But again, if you want to bring this to the next level, then regulation is very important. And by embracing regulation, then we can provide a safe marketplace for corporates on one side and professional investors on the other side to get together, knowing that there's a regulator that oversees our operational activity. So this gives peace of mind on the corporate side, knowing that the funds that we're providing is legitimate, and on the investor side, knowing that whatever we are doing, a regulator has vetted our operational procedure, so then everything is compliant.